Greetings to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for today, Monday, 17th of July. So first of all, let's review the major market movement. So the first instruments, we are looking at the dollar index in 4-hourly chart. So the US dollar was fell to its lowest level since October against a basket of the other major currencies on Friday, down 0.69% to 94.9 on late Friday after the weak US inflation and retail sales data added to doubts over the various of plans to raise interest rate again this year. So according to the Labor Department said on Friday, US consumer price inflation slowed to 1.6% in June from 1.9% in May, and the consumer spending was also weaker than expected, with retail sales falling 0.2% in June compared to expectations of a 0.1% rise. So the Fed raised hike rates at its June meeting and stuck to its focus for one more rate hike this year, but the sluggish inflation outlook has raised the questions over whether officials will be able to stick to their planned tightening path. And in testimony before Congress on Wednesday, Federal Reserve Chair Janet Yellen says the economy is on a strong enough footing for the Federal Reserve to raise rates and begin winding down its massive bond portfolio. However, she also reiterated that inflation is below target and noted that it is a particular uncertainty that could affect the monetary policies. As for the other major market movements, including the USD-JPY pair, so the US dollar was weaker against the Japanese yen, with the pair down 0.65% at 112.53 on late Friday, after falling to a 2-week low of 112.28 earlier. And as for the euro, the euro was gaining ground, with EUR-USD advancing 0.62% to 1.1469, closing in on the 40-month high of 1.1488, which set on Wednesdays. And sterling was also higher, with GBP-USD up 1.24% at 1.3099 after hitting 1.3114 earlier, its highest level since September 2016. And as for the Aussie, the Australian dollar surged to an almost 15-month high, with AUD-USD pair jumping 1.28% to 0.7829 in risk on trade as global stock market hit the record highs. And the last major market movement is from the Kiwi, the New Zealand dollar against the US dollar. So the pair NZD-USD was also higher, adding 0.33% to trade at 0.7346. Having a tag in commodities markets, the gold price rose to a 2-week highs on Friday, ended up 0.95% at $1,228.88 as the weak US inflation data added to doubts over whether the Federal Reserve would raise the interest rate for a third time this year. And the expectation that rates will stay low tend to boost gold, which struggles to compete with the yield-bearing investment when borrowing cost per rise. As for the oil price, it settled higher for the 5th session in a row on Friday, with the US West Texas Intermediate crude tagged on 46 cents or around 1% to end at $46.54 a barrel by close of trade Friday. It touched its highest level since July 5th at $46.74 earlier, as the investor cheered data suggesting that demand for oil will pick up during the second half of 2017. Despite of the recent gains, concerns over the rising global supplies remain on investor minds. The US driller added 2 oil rigs in the week to July 14, and energy services company Baker Hughes announced on Friday. As for the oil price, it was settled higher for the 5th session in a row on Friday, with the US West Texas Intermediate crude tagged on 46 cents or around 1% to end at $46.54 a barrel by close of trade Friday. It touched its highest level since July 5th at $46.74 earlier, as the investor cheered data suggesting that demand for oil will pick up during the second half of 2017. Despite of the recent gains, the concerns over the rising global supplies remain on investors' minds, and the energy services company Baker Hughes announced on Friday that US driller added 2 oil rigs in the week ended July 14th, and this brings the total count up to 765, which is the most since April 2015. underlining the concern that the ongoing rebound in US shale production is derailing effort by other major producers to rebalance the market. And in May, OPEC and some non-OPEC producers extended a deal to cut 1.8 million barrels per day in supply until March 2018. So far, the production cut agreement has had little impact on global inventory levels due to rising supply from producers not participating in this accord, such as Libya and Nigeria. And the OPEC member Kuwait said on Friday it will be premature to cap Nigerian and Libyan oil production as the two African countries' output needed to stabilize further. A ministerial committee from OPEC and non-OPEC countries, which is headed by Gulf OPEC member Kuwait, will meet in Russia on July 24 to discuss compliance with the cuts. Right, so as for this week, investors will be turning their attention to the outcome of Thursday's European Central Bank meeting for the fresh clues on when the central bank will shift away from its ultra-easy policy. And Monday's data on Chinese second quarter growth will also be closely watched along. So now we're going to review the highlighted economic data that released on last Friday, as well as the highlighted data going to release today. So on Friday, the United States was released a batch of economic data, including the inflation and retail sales. So the batch of the data was under expectations, okay, with the CPI of the United States for June was released as 0.1%, okay, slightly under the expectations of 0.2%, as well as the retail sales of the United States for the June, right, it was negative 0.2%, okay, fell into contracted territory. So this is the main reason that US dollar get pressures on Friday, right? And the last data on Friday is the US packaged oil rig count, which I just mentioned on the WTI review. Okay, so the oil rig count was 765, okay, slightly higher than the previous. As for today, so during the morning hours, the China was released its second quarter GDP as well as the June industrial productions. So the second quarter GDP of China was at 6.9% growth, okay, which is slightly better than expectations of 6.8%. As for the industrial productions of June, it was 7.6%. It was slightly higher than the expectation as well, okay. So it benefit to the Australian and New Zealand dollar as well as the gold price. And later today, during the European trading hours, the European will release the consumer price index, or we can refer as the inflations, alright, and the inflation is expected to remain the same as 1.3% growth. And now we're gonna review the technical analysis, and the first instruments we're looking at the GBP USD pair in 4-hourly charts. So the price of GBP USD was moved higher, okay, and the price was closed above the previous high and currently hovering around the resistance level of 1.3100, okay, 1.3100. So the trend direction is still pointing upward, referring to the MACD. The both movement line is pointing upward now and expanding, and in addition with the momentum in the MACD window was growing, okay, growing higher. So means that the momentum for the GBP USD to move higher is strong. So by the price closing above 1.3100, it is very potential to move further higher towards the next target of resistance level at 1.3160. Turning our attention to the Euro-USD pair in daily charts, so the Euro-USD is remain in an uptrend, and currently the price is hovering around the resistance level of 1.145, alright? So it is suggested to move further higher following the uptrend and towards the next target of resistance level at 1.1760. Okay, it's just that the short term it might retrace based on the MACD. The both movement line was crossed from top to bottom, okay, and it is narrowing, so the upward momentum is decreasing as well. So in short term it is probably to retrace slightly, but for longer term it is still suggest to move further higher after the price come back above and close above 1.145. Then we can aim for the next target at 1.176. As for the Kiwi, the NZD USD pair in daily chart show us that it was get some pressure from the level of 0.7333. Okay, so this is a very strong resistance level for it because it's just stick with the previous high as well. Alright, so retracing from the current level, that will appear a double top patterns. Right, so double top means that for the further period it might probably to move lower. Okay, but by closing above the previous high, then the uptrend is suggested to move further higher and continue. So the next target of the resistance level will be at 0.745. Okay, so in this situations, I would recommend to wait until the price reaction itself, then only we make decisions to whether follow the trends or we just to speculate for the retracement. As for the Aussie, the Australian dollar and United States dollar pair was moved higher at a record high, and currently the price was closed above the resistance level of 0.7756, or we can refer to the previous high. So it is probably to move further higher and continue the uptrend towards the next target of resistance level at 0.8000. So the support level we can refer back to 0.7756. As for the Japanese yen, it was retraced from the recent high and the price was fell to the level below the both moving average line. So in addition with the moving average line was form a death cross, okay, which crossed from the top to bottoms and pointing bottom now. So it is expected to move further lower after the price closed below the 112.32. Okay, 112.32. So then it will move as a retracement to move further lower towards the next target support level at 111.71. Alright, so the current resistance level we can refer back to 113. As for commodities, the gold price was rebound from the recent low and back to the level above the both moving average lines. And the both moving average line was formed a golden cross, so which stated a signal for the gold price to move further higher. So it is suggested to move further higher after the price close above 1232. Then the next target should be at 1244, right? 1244. And the first support level we can refer back to the both moving average line. As for the oil price, the WTI oil price in 4-hourly charts is moving as an uptrend and currently is heading towards the next target of resistance level at $47.20 per barrel. So which is just stick with the previous high as well. Okay, so because the current price has not reached the target yet, alright, so it is suggested to move further higher. And still got some potential to move higher towards the next target of 47.2. Alright, that's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.